Okay, well, let's get started. If more people turn up, I will let them in. What I wanted to do was just go through a couple of slides about Easy Wealth, just basically for Sarah's benefit. So
It's just
what is
coming up,
Easy Wealth?
thank you.
It's a
Yeah.
way to make a lot of money with virtually no risk and with no further effort once you've got it started. It takes, by my reckoning, about an hour or less than an hour to set it up. And you put in as little as $400. You can put in more if you want. That's about £300 or 360 euros. And then with a bit of luck, after a couple of years of just sitting and watching it grow, you'd be set for life. So that's the idea. Now, the unfortunate thing is that sounds too good to be true. So the obvious question is this a scam? And my answer is absolutely definitively no, it's not a scam. The first thing is scammers normally will try and get as much information out of you as they can. Will never ask you for your credit card or your bank details, never ask you for any money, never ask you for any information apart from just your name and your email, which allows me to communicate with you. And we're so confident in the system that if you join up with it, we give you a money-back guarantee for the first 90 days. So if you put money into the system and it made a loss in the first 90 days, then at the end of that 90 days, we'd pay you back everything you've lost so that you could walk away with just what you put in. So I know people that are listening to this may not know me and may not trust me, but to the extent that you can trust anybody you don't know, this is at least a fair offer that there is nothing to lose as long as I'm good for my word and will pay you back a few $100 or $50 or whatever it is that you might have lost over 90 days if the system didn't work, which I think is extremely unlikely. I can't actually imagine a situation where that's going to happen. Well, I can, but it is so far-fetched, it's unlikely to happen. So we offer a guarantee as well. So what is it if it's not a scam? Well, it's an opportunity to make serious money with virtually no effort and get rich within a few years, starting with just a few £100s or dollars or whatever, using compound interest, which is something that most people don't really understand, to grow your account outrageously fast by auto trading in the forex market. So I'll go through a little bit about compound interest and a little bit about the forex market as well this evening. So how do you make money? You know, the normal ways is you earn a salary and you save as much as you can, or you start a business. Sarah, you know that. I know that. Kath knows that. Renee's done that as well. So, you know, we're all people that have started a business. We know how much hard work is involved. We know how much risk is involved. We know how much stress is involved. It's not an easy way to get rich. And most of the people that start their own business never get rich. You know, 85% of the small businesses in the UK are running at just over broke. There's only about 15 that are profitable and only a few of those that are highly profitable. So it's not easy to make it really successful. You could pay a guru to show you the way. I've paid £10,000 to one guru and $10,000 to another to show me an easy way to get rich on the internet. Didn't work out for me in either case. You could put money in the bank and you'd earn something probably considerably less than the rate of interest most years. The rate of inflation. But if you're lucky and you earn a little bit more than inflation, you're not going to get rich that way unless you've got millions to put in the first place, in which case you're already rich. Invest in the stock market. The average return on the stock market over the last 30 or 40 years has been about 8%. It's worth having, but it takes a very long time to build up. A quick way is to marry a millionaire. And if you don't have one available, most people don't. That's not an easy way. So what else can you do? Forex trading. Okay. I think I've got a typo here. When I put this slide together, I copied a number from one source which said that $7.5 billion a day were being traded. I think the correct figure is $6.5 trillion. So it's even bigger than what's showing on the screen. And if you have consistent winners, then you can make money, obviously. If you have automated systems, which is what the banks and the hedge funds all do, then it makes it much easier to make money because an algorithm or an automated system will work much faster than a human, much more consistently than a human. And that's what we've put together here. So this is the Easy Wealth bot. It's the only photograph that I have of him. He's very shy, doesn't like being photographed. But he's the result of 5 years of hard work by my partner, Tom, doing lots of innovation, lots of testing, lots of coding, running live tests with real money, running back tests on historical data, all sorts of things to try and work out a way of making money that is low on risk and high on profit, which is obviously the ideal in this situation. So it's been making money on the back testing consistently more than 20% a month, since we've had it running, it's been making more than 20% a month, running with the current version of the bot running for the last month. In the last week, it made nearly 25%, let alone the last month. So it's really performing very well indeed. And it runs on autopilot. I would say that we don't leave it on its own. It's constantly supervised by Tom. He's watching it to make sure that everything is going in the way that he expects it to go. And if it wasn't, he would immediately intervene manually and change things. But on autopilot, it normally places anything from 10 to 70 or 80 trades in a day. Some days are very quiet. There's only 5 or 6 trades. Some days we switch it off because we expect to have trouble in the marketplace and too much volatility and it's not worth trading. Other days, it might place 80 trades and close all of them in the same day. Usually the trades are closed overnight so that we start a new day fresh, but sometimes there are trades, as is happening right at the moment. We've got a whole lot of open trades because the DAX that it's been trading on has zoomed up during the day, and we've got a lot of trades open which will probably close tomorrow or the next day when it moves back in the other direction. So it makes money on up markets, it makes money in down markets. It doesn't really matter what the market's doing. The only time it doesn't make market if the money goes if the market goes purely sideways. In other words, if the prices just wobble around the same level all the time and there's no progression from hour to hour and day to day, then it's hard to make money. But as long as the market's going either up or down, it will generally make money. We've put it through 20 years of back testing, and it only hit the bumpers twice in 20 years, which is an astonishingly good record. And when it hit the bumpers, it was hitting a stop loss that was set at 35% maximum loss. So it's not as if it lost the entire account twice in 20 years. It lost 35% twice in 20 years. And the rest of the time, it's been making money pretty consistently. So that's what the forex markets. There's the DAX index from 1992. This is looking obviously over a span of years, 92 to 2022. You can see it wiggles up and down a lot, and in the recent years it's been much more volatile than it was in the earlier years. I think that's probably all of these. Okay, so the bot has had, historically, it's come out with an 84% win rate. In other words, 84% of the trades that it makes, it wins, makes profit on, and 16% of the trades it loses money on. It's very low risk because it doesn't usually put very much of the account on a trade at any one time. Normally less than 1% of the account is drawn down. Occasionally it'll go a bit further than that. And there's a sort of fail-safe stop put in at 25% if things were really going pear-shaped and a quarter of the value of an account was being lost within, let's say, within a month from where it was at last month end. At that point, it would close all the trades and stop so that you're not going to lose more than 25%. Now, the forex market is an inherently volatile market, and you can get situations once every few years or every couple of decades where the market goes completely ballistic. It happened a few years ago when Switzerland decided to peg the value of the Swiss franc against the dollar at a value which was far from its current trading value. And the market just went completely ballistic for an hour. And in a situation like that, even if you've got a stop loss order, which is going to be automatically applied by the algorithm, you can find that the market has just gone from here right down to there, and it's past your stop loss, and where the order gets filled, you're at a different value than the one that you expected. So it is possible to lose more than you expected, but it's very rare. So I think it's worth saying that, this is not a no-risk situation, but it's a very managed low-risk situation. Hi, Rennie. Nice to see your face.
Hi, this is my husband, Bruce.
Ah, hi, Bruce. So I'm just running through some introductory slides, and we're going to, then I'll have questions and answers after that. So the compound growth, let me just switch over to another presentation, because growth is something that a lot of people don't understand. If you think about growth, you tend to think of something like this. Now, if you had a big hose going into an Olympic-sized swimming pool that was going to fill it up in 10 hours, then every hour it'd be putting in about 25 centimeters of water. 2 hours, you're half a meter. 3 hours, you're 1.5 meters. Sorry, you're 3/4 of a meter. 4 hours, you've got a meter of water in the pool. This is the steady growth that we expect, because this is what you see with children growing, with trees growing, with things like that. If a tree grows 2 feet a year, which many trees do, In 10 years' time, it's going to be 20 feet taller. And in 20 years' time, it'll be 40 feet taller. That's how we think of growth. But that's not how compound growth works. And compound growth, or compound interest, or exponential growth, all words for the same thing. Einstein is supposed to have said that this is the eighth wonder of the world, right? He who understands it earns it, and he who doesn't pays it. And I think, compound growth is basically the secret to riches. Now, if you fill that same swimming pool over 10 hours, and you did it in a compound growth way so that you were doubling the amount of water that goes in every hour, what you see is over the first 6 hours, you'd barely be over your ankles. Right? The pool would still look empty. In the 7th and 8th hour, it starts to look as if it's starting to fill up. And then 9th hour, it's half full, and 10th hour, it's full. And it's that rocketing upwards that happens which distinguishes compound growth from linear growth. And that's what the important thing is in understanding how this works. So if we take an example here where, let's say you're going to put $100 aside into, or £100 aside into an investment with no interest rate over 30 years, and every year you're going to increase the monthly input from $100 to $105, and then 5% more than that, 5% more than that so every year it's going up. At the end of 30 years, you'd have saved nearly £80,000 or dollars, right? If you had an interest rate of 8%, which is the average of the stock market, that same amount of input would have earned you almost $250,000. So we're looking at 3 times as much money at the end of 30 years because of an 8% growth compounding. If you could get a 12% rate, you double the amount you get to in the end of 30 years. And if you get 16%, you're talking about $1 million. So we're more than 10, more like 12 times as much money as you put in that you end up with. So that's the power of compound interest. Now, here's another example where there's no annual increase, but you're looking at just a monthly input of $100. If you could get 16% on this, it would end up at $800,000. If you could get 25%, which is what people hope to get out of investing in the stock market, that same input would end up with $8 million. So the rate of interest makes a huge impact on how rich you get over that time span. But the key thing about forex is that we're not talking 30-year spans. We're talking of days and weeks to make a big difference. So if you look at what happens with our little bot at the moment, which is currently producing at least 20% per month, it's not producing 20% per year, 20% per month, right? If you started with a balance of £500, after a year, and this is with no additional input, just interest growing at 20% per month. So you'd be making 100 in the first month, and you make what's it going to be, 600, so you make 120 in the second month, and it's just compounding up month by month. At the end of 1 year, you'd have nearly $4,500. So the compound impact of 20% per month is nearly 800% a year, is 791 point something. If you kept that there for 2 years, you're up to $40,000. If you kept it there for 3 years, you're up to $350,000, which is more than the average price of a house in the UK. So £500 put into this scheme at the moment, if it keeps going the way that it has been doing, in 3 years would be enough to pay off a house. If you could keep it going a bit longer, well, let's just look at this on a graph, right? You see that year 1, you're starting with next to nothing. It looks very interesting, but it's still a really small amount of money after 1 year. It's getting significant after 2 years. It's massive after 3 years, right? This is the way that the growth works. So what happens if you could keep it going for 4 years or 5? Well, after 4 years, you'd be into the millions. And after 5 years, you're into 8 figures. I mean, that's more money than most people could spend in their lifetime. It's certainly far more than most people earn in their lifetime. So this really becomes impressive. And here's the graph showing 5 years. Your 3rd year total, compared with the 5th year, is almost insignificant. It's going to get 8 times bigger in year 4 and 8 times bigger again in year 5. So this is the growth that we're dealing with. So, okay, leave that presentation, go back to the other one. So the minimum you can put into this is £300 or $400, same thing. And if we look at what happens to that, then it's going up to £2,500, £23,000, £200,000, 2 million, almost in year 4 and 16 million in year 5. So this is starting not with £500, but starting with just 300. It's still very, very impressive growth. And the interesting thing is, if you stopped, by the way, if you want to play with this at all, there's a website called thecalculatorsite.com. You can go there. It's completely free. You find their forex calculator and you put in the interest rate and you change it from yearly to monthly and look at how it would grow over a period of months or years. You can do all the calculations backwards, forwards and sideways and convince yourself that these are real numbers. These numbers all come off that calculator. So what I was going to say was, starting with 300, in a couple of years, you've got some substantial money. And if you stopped then and took an income from it, that income would be, what's it going to be? 212. So it's about £40,000 a month. I mean, this is an insane income to live off. It's kind of the money that, you know, professional footballers make and people of that ilk. If you stayed in it for 5 years, you've got into mega millions. You need to pay tax, and people have asked me, well, how can I afford to pay the tax? Well, if you think about it, if we're in the year when you've just made 200,000 odd in profit, would that be enough money to pay the tax on the 23,000 that you made the year before? Yeah, I mean, easily yes. And when you're up into the millions, the same thing applies. If you're making money that fast, you've got lots of money with which to pay the tax from the previous year. And tax is normally paid in the year after you make the money in most countries. So that's it. The 212, the exact figure, £35,440 a month. That's an income that most of us could live on very comfortably indeed. So how can you try it? Well, for the first 90 days, we take away all the risk, as long as you put in somewhere between $400 and $1,000. We don't want to guarantee an account that somebody puts £100,000 into. I think it's reasonable if they're going to put that kind of money in that they hold the risk. But for a small investor or somebody wanting to test it out, see if the system works, keep it in there for a couple of months and then decide whether you actually want to take all the money back out or whether you want to put more in or whether you want to stay in with what you've got. For those 90 days, we guarantee it. The only caveat is, well, this is the guarantee, is that if you make a loss, we'll repay you in full at the end of that 90 days. On the other hand, if you make 30% profit on it, at that point, the guarantee drops away. We think that you should be happy enough that the program is working and from there on you can carry your own risk. And there isn't any limit to how much investment you put into it. Other ways that you can reduce your risk is, firstly, just to point out that the money never comes to us. It's not Tom and I holding your money. It goes into a brokerage account. And the holding company of the brokerage is based in Australia. It's fully regulated by the Australian Securities and Investments Committee. And they hold the money. So it's like opening a bank account. You're the person that opens it. You have to prove your identity to open the account, and the money belongs to you. You want to take it out anytime, you can take it out. Instead of earning interest or paying them to store your money, you hook it up to our trading account and it will trade. And if it makes profit, then that's what you're here for. So the second thing is, if you've doubled your money, and that typically would happen within, we think at the least 3 months, 3 to 4 months at the slowest, and it might be faster than that. There's no reason why you don't just take out the original deposit so that you've no longer got any of your original money at risk at all. This is what I mean by trading risk-free. You know, if you put in $1,000, you double it in a couple of months' time, you take out $1,000, what's at risk? Only the profit that you've made, nothing that you took out of your savings. And if that money goes on and doubles every couple of months for the next few years, it's going to make you an awful lot. The other thing you could do is you could spread your investment. So you could take some of the money out and put it into other investments. They'll probably be lower growth, but you'd be diversified, so you're spreading your risk, and that's a good thing to do. You can invest as much as you like, and stay as long as you like. So the reason that we're making the offer is that we're happy to make you rich, and we charge nothing up front because we're going to take a 25% split of a share of the profits that are made on the money that you invest. And you know, if we can get 100 people or 1,000 people to invest in the scheme, making a 25% of the profit on their money is going to make us much more money than if we had simply put in our own funds and waited for them to grow on their own. So there's an incentive for us to make you profitable so that we can get a share of the profit. And we expect you to make at least 20% a month after we've taken our profit share. And we only make money when you do. So this is unlike most scams, right? Scams are there to make money whether or not you do well out of it. This is a system where we'll only make money out of it if you're doing really well. And if you're getting 3/4 of the profit for no effort, and you're paying us 1/4 of the profit for having set up the system that allows you to do that, we think that's a fair deal. Okay, I think I've said we take our share at the end of the month. So last day of the month, 25% of that month's profit would be taken out, and that comes to us, and that's done automatically by the broker. We don't have access to your account to take that money. The broker puts it over to us. And if you take a withdrawal earlier than that, and there's been profit made since either the last month end or the last withdrawal, then 1/4 of the profit made that you're withdrawing, I think, would be reserved for us. It wouldn't be handed out to us at that point, but it would be reserved in your account and then paid to us at the end of the month. So I think that pretty much sums it up. It's a way to make a lot of money with very little risk, no further effort, takes about an hour to set it up, and the minimum investment's $400, which most people can afford. So I think at that point I'll stop sharing my screen and just open it up to questions. And I'd love to hear what questions you might have. Sure, Sarah, go ahead.
Yeah, as I said in my email, Brian, I mean, I've invested in the stock market for, most of my adult life.
Yeah.
And so I'm aware of the risk, and certainly I did a course on forex, but it's something I didn't pursue because it is risky, and I think you do have to know what you're doing. So if you've got a bot that does it for you, then well done you. Have you invested in it?
Yeah, I've got.
And have you made money?
Yes, my account.
You have made money.
Yeah, the first day that I opened my account, it made 60%, which is completely outrageous. And it's continued to do well since then. That's not a level that I expected or that we can promise to anybody, but yes,
no.
It's doing very nicely.
Okay, so you said that you want to get more money, and by effectively not selling the course, but promoting this as a way of getting other people rich.
Yes.
It will accelerate your getting rich as well, because you're going to take 25%.
Yes.
So, yeah, okay. So why? I'm kind of curious why you're doing that. I mean, really, if it's as successful as you're saying, and I appreciate that you probably haven't been in for the 5 years, why are you doing this? Why are you going to all this trouble of Entrepreneur Circle and making Facebook ads and everything else? Because, as you found out, that system has thrown up a few issues for you, i.e. they think it's a scam.
Well, I've had family situations in the last couple of years that have completely drained me financially. I've supported my son who had...
Oh, it's okay. You don't have to go into detail, please. It's just, I'm just sort of altruistically wise. I'm curious.
I'm quite open about it. He was in a partnership with somebody who tried to steal his IP, and I financed the legal costs of untangling that so that he's ended up back with the IP in his hands. But that has, it's drained all my liquid assets. So I'm now in a situation that I didn't expect to be in at this stage of my life, where I have a mortgage that still needs paying off, and I have a wife who feels nervous when we're short of cash. So I'd like to have enough money to pay off the mortgage and stop her feeling nervous, and then we'll be very happy.
Okay.
So those are my immediate things. I've had a dream for the last 10 years to build an app that would really make a difference to literacy worldwide, and it needs a fair amount of money to develop and test that app. And that's something which is, if you like, a passion project that I can't afford to do at the moment. I've got all the plans. I know who can do the programming for me, but it's going to take months of programming. It's going to take a fair amount of money to get it done. I'd like to kick that off. So those are my personal motivations. It's both to get into a more comfortable situation personally, but also then to follow that passion project.
And I wish you luck. My final question is, why is the brokerage account in Australia?
I've been guided on this by Tom because he is the long-term expert in the field. I'm not. And He has worked with a lot of different brokers. He's found that some of them are very slow to pay, and some of them have very poor help service. Some of them have very wide spreads, and therefore it's harder to make money. Some of them will only work with lower leverage rather than high leverage, and therefore it's again harder to make money. And so he's ended up with an offshore brokerage owned by an Australian firm, and that's what is producing these outstanding results. So I'm not arguing with it, but if you want the detail of that, we'll have to put the question to Tom and get him to come back to you by email.
Okay.
My LinkedIn feed is obviously going nuts in the background and I can't stop it notifying me. Renee, did you have any questions that you wanted to raise?
Yeah, I do actually. Thank you.
All right.
First of all, apologies I was so late. So I appreciate the fact that you let us still come on. Okay, so the question I have is around, let's say, because I've done forex before and I've done okay, and that's good, but nothing like what you promote. Okay,
Mm-hmm.
and so I'm okay to risk some money, etc. If I put in, and of course, by the way, I just want to say to you, don't say scheme to any of us North Americans, because that's a bad word.
I'm sorry, I'm so used to talking British English, I forget about it. Yes, it is a system, it is not a scheme.
It's a plan, it's a system.
For the English people, the word scheme in America means something illegal.
It's very bad. Yeah, it's like a scam.
Yeah.
Okay, so if I put in a minimum amount or whatever, $1,000 or whatever. So when I do that, and let's say I just want to be safe and take out my initial investment, which is fine.
Yeah.
And let's say that whatever the amount is, somehow for whatever reason there's a blip in the market or something. I know you do have some safeguards, some guardrails that says not to risk all this money, etc. So is there is there a chance, not an opportunity, but a chance that I take out part of my money, that my main investment, and then whatever is left over, something happens and all of that money is gone? Is there a chance I'm going to end up having to pay something to replenish the account or to do something to keep it active? Is that going to happen? Is that a good question or not?
Yeah, no, I'm completely with you. I probably need to get confirmation on this from Tom because I might be talking beyond my remit. My understanding is that the worst that can happen is if there's a catastrophe in the market and you're heavily exposed at that point, you've got a whole lot of trades open at the same time, that the trades will close out and your account goes to zero.
Okay.
It cannot go below zero.
Okay.
So my understanding is that there would never be a question of you have to pay back a loss that you hadn't intended. The worst that would happen is that you end up with nothing in the account. That's my understanding.
You can leverage. You can leverage, can't you? And that's the risk. You can leverage. The brokers can leverage, which is why it's such a risky thing, because some people who don't understand it properly can end up owing thousands, and that's the risk as well.
That is what I'm worried
you about that. If you could find out, Brian, that would be great.
I'll ask Tom for a detailed explanation about that.
My understanding was the most that I could lose was the 25 or 35%.
Well, the most that you're likely to lose is nothing at all, because the thing is trading so reliably at the moment. We're having day after day after day after day of profits. Don't think we've had.
Yeah, but we haven't had a scenario where the markets go crazy, and that is going to happen at some stage.
Sure.
Yeah, and I think based on what Renee's just said, I would like to know that I'm not going to be kind of owing money. I was, as I say, as I understood it, the most that I could lose of my initial investment was a 25 or 35%.
Yes. Well, we've got the stop loss settings in at 25%. So if the account lost 25% at that point, it would stop trading. Now, that's if everything works. but it's if everything doesn't work that you have a risk of a greater loss. So if the market moved really quickly from here, bang, down to there, and it went straight past the stop loss, and the stop loss wasn't operated because the market was just going so fast, that does happen, once in a decade or so. Now, you wouldn't necessarily be exposed to that when it happened. It just depends what prices are moving and what you're exposed to. But in the worst scenario, where you are heavily exposed to whether it's the dollar-pound relationship or it's the value of the DAX stock exchange or whatever else it is, if there was something that you were heavily exposed to and a situation like that happened in the market, then you might lose more than 25% of your account. You might lose 60 or 70 or 90% of the account. In the very, very worst scenario, you could lose all of it. What you couldn't do is find yourself in debt. Because as far as, and I will check this with Tom, but as far as
can you confirm that, please?
Yeah, I'll check with Tom on that. Yeah.
Okay, cool. My next question becomes, let's say, is that okay?
Yeah, you put your next question. After that, I'm going to show you another couple of slides about risk and, I have a couple of slides about risk that are worth showing, but let's have your question first, Renee.
So I have actually two more questions. So my first of my next two is, okay, so let's say I pulled out my money and I pulled out my initial investment and for whatever reason, it went down below $400. I'm talking dollars, not pounds, right? So if it went down below 400, does that mean I have to top it up to be at least 400 for it to continue to trade, or how does that work?
No, the account will keep going, but you can't open it with less than 400.
Oh, I see.
If the balance went down below 400 because of poor trading, it would keep trading. And if the robot's doing its thing, it would build up again, and you'd soon be up well above 400 again.
Okay, cool. And then my second of my third questions, or my last, what I want to find out is what's the ability for this whole thing to be hacked? Because cybersecurity is a big issue, right? So I want to know kind of about the safeguards for this whole system, and our accounts, my account, what's the possibility of my account being hacked, and what are the safeguards and the guardrails around that?
Okay, I think the people that would have to answer that for you are the brokers themselves, because it's their account that, they're holding the account that your money goes into. We don't hold it. All we're doing is providing a feed of information that says these are the trades that we're making, and they're instantly replicated on your account from the same server. Now, they are a brokerage which is handling millions of dollars in trades every day. I'm sure that they have an IT department which is a lot smarter than I am and a lot more experienced than I am in that area, and that they're very much aware of the need to protect against hacking. But I can't tell you what their protections are. They would have to explain that to you and tell you what they have in place to keep you safe. Okay.
And Brian, not that you have to answer this right now, but at some point, I'm curious about any development on the bot, because as we all know, things like AI is happening rapidly. And so you have to always be ahead of the curve. And so at some point, what you and Tom are doing for development on the bot would be really helpful, but I don't need to know that right this minute. So I'll let you proceed with showing your slides, because I could take over the whole session. I'm not going to.
I can give you a very quick answer to that, which is that Tom is thinking constantly about the bot and how it's performing, and he's always trying experiments on the side. So he's been running one bot that's only been trading gold and nothing else for the last month. I think it had 43 consecutive wins last time I heard about it. It hadn't had a losing trade. And that's very unusual, because normally you get a mix of wins and losses in any trading situation. So the question is he going to bring the gold trading into the current bot, the version that we're all depending on at the moment? And the answer is, I don't know. That'll be his decision. If he does, you'll probably start seeing a whole lot of gold trades. We had a couple of gold trades running at the beginning of the month, and there was something that he wasn't happy with there. So he ended up closing them down and taking a loss on them, and then not reopening the gold trading within this trading session within the last month. But it's done very well in spite of having something that didn't go perfectly. But he is the archetypal dabbler and tinkerer of trying new things. He's always trying new ideas and what happens if we trade overnight on the Asian session rather than on the opening of the American market, and what happens if we do this, what happens if we do that, what happens if we try a different set of settings on the bot. You could ramp this thing up so that it makes money incredibly fast if you're prepared to take a high level of risk. But what he's trying to do is provide a really low level of risk, so that from the retail investor's side, you see this as essentially a risk-free investment, that it just makes profit every day, except a few days it doesn't make any profit, but it doesn't really make a loss either. And the other days it makes lots of profit and makes up for it. So that's the way he's trying to head with it. And if he can get it to do that, then and still make 20% a month, I think many people will be very, very happy with that performance.
Okay, cool. Thank you. Thanks very much. I'll stop monopolizing the time.
Let me just share my screen again and go to the slides on risk, because this is something I put together. Where's it gone to? Right. I need to, right. Are you seeing? Yeah, okay. You're seeing my screen and seeing a tiger and some apples. No?
Yes. Yeah.
Yes.
We were a minute ago.
Okay, here we are. So risk actually has two sides to it, right? There's people talk about risk, they usually think only about the downside. But risk is always two-sided. There's always what could go right and there's what could go wrong. And in thinking about it, you need to consider, what's the benefit if things go well and what's the problem if things go wrong. Now, in caveman days, there was obviously a huge amount running on the downside risk. So if you met a tiger and you didn't take immediate, avoiding action, you would end up being the tiger's dinner. And that's the end of your life. You never had any children, and therefore your genes were not passed on. So the people that were really, really scared of tigers and took immediate evasive action, they're the ones that we're descended from. The ones that weren't too bothered about it all got eaten. If you made a mistake on the upside, if you saw some fruit and you thought, is it worth climbing a tree to get those apples or whatever it might be, and you made a mistake on the upside, it didn't usually have such dire consequences. You might miss out, you might have eaten an apple that had a worm in it and tasted yucky, or you might have gone for an apple and found out that it was rotten on the other side. We couldn't see it. There's not much there to eat. But it's not going to be a matter of life and death in most cases, whereas the downside risks tended to be a matter of life and death. The result of that is that we are hardwired not to think in rational terms about how likely is this and how serious it is, but we see risk like this. Right? The downside is just magnified in our brain by the way that the brain is constructed, compared with the upside. So what we need to do when thinking about situations, this is the reason, in my belief, this is the reason that most people never get rich, because they would never take a reasonable chance, because they'll see it as unreasonable. They see the goodness as being tiny and the downside as being really big and serious. So if you could switch that round, if you can find a situation where the chances of things going right are much bigger than the chances of them going wrong, right? So the apples are big and the tiger is small, put it in those terms. And better yet, if you could reduce the risk so that if things did go wrong, it's not likely to go wrong, but if it did go wrong, it's not serious. Let's say you can change the tiger for pussycat, right? Then that changes the situation altogether. And that's basically what we're trying to do here. We're trying to take the risk away from you, give you a situation where you can put some money in, and the worst that could happen is you lose a small amount of money because that's all that you put in. So we don't encourage people to go out and max their credit cards or borrow a lot of money and put it into the system. Absolutely not. It's only money that you could afford to lose, so that if you lost it, it's not the end of the world. And then as soon as possible, you take some money out so that your risk is even less because you've got back what you put in, and be sensible with it and it will probably go the way that it's been going. We can't make any guarantees about it. This is based on trading a very volatile market, and the rules of the market could change in the same way that, if you've been advertising on Facebook in the last 5 years, the algorithms keep changing, and what used to work doesn't work anymore because they've changed the rules on you. Well, there's nobody doing that to the forex market, but there are times when gold trades very well, and there are times when gold hardly moves at all. There are times when the pound and dollar fluctuate wildly against each other, and depending what kind of trading you're doing, that could be either very good for you or very bad for you. And there are times when it doesn't do that. So we can't predict future performance, but what we can say is that this bot is doing amazingly well at the moment, and it seems likely to continue. And if it doesn't work out, well, what have you lost? You've lost maybe some hopes, but probably not an awful lot of money. So Kath was talking earlier about, and Sarah, about leverage, right? Just in case anybody who's watching wants to know a little bit more technically what leverage means. It means that if you've got leverage of 1 to 500, which is what we trade on with the Easy Wealth bot, that means that when you buy dollars with pounds, if you buy a pound's worth of dollars, you're not buying £1 worth, you're buying £500 worth. And that means that if the dollar value goes up by 1 cent, you'd make $5 of profit because you're making 500 times more benefit than the actual money that you're putting at risk. It also means if it goes the other way, you make a $5 loss. So leverage is absolutely a two-edged sword. It works up and it works down, works for you or against you. And that's why it's important to have a trading system that's making mostly profit. And if the amount of profit and loss that you make on different trades is roughly balanced, and you're making more profits than losses, you're going to end up happily in the black. If you made big losses and small profits in equal numbers, obviously you're going to lose money. But we're looking at the moment at 70, 80%, maybe 84% on the historic trading win rate, and we're looking at roughly equal sized profits and losses. And that means that we're making money like bandits. So that's leverage. The other thing is trade sizes. If you bet the farm on one particular trade, then you maximize your risk both up and down, right? So huge risk upside. This is like going into a casino. I saw a newspaper report of a man from England who went to Vegas. He sold his house at a time when you could buy a house for £50,000 in the UK. He sold his house and he had £50,000 cash in his pocket. He went to Vegas and he put it on black on the roulette. And he doubled his money in about 30 seconds. And he walked out again. But that's a huge risk. He could just as easily have walked out with absolutely nothing and lost the entire value of his house. Right? So that's crazy. And that's not what forex brokers, forex traders do if they're remotely sensible. Normally, they'll make a trade which is putting 1 or 2% of the account at risk, maybe at the most 5% of it, but usually much, much less than that. And so you've got these two opposing forces. You've got leverage increasing the risk, and you've got the small trade size reducing the risk, and the balance is somewhere in between. So you get modest gains, modest losses by only betting a small part of your portfolio. And the robot does that automatically. It sees how much money is in your account when it places a trade, and it takes a fixed percentage of that and puts that as the trading amount. So that's trade sizes. And the third thing, obviously, is the expertise. Tom's expertise has been bottled and put into the trading robot. So most of the time, he's not doing any trading manually. He's just watching what's going on to make sure it's not doing anything unexpected. But basically, there's a tremendous amount of technical analysis going on to find out when is a good time to trade. When are there sufficient signals? He's looking for at least 5 signals, all coinciding before he'll place a trade. And some of those are based on proprietary indicators he's developed through his experience over the years. So he's looking at not is there, we have the saying, there's one swallow doesn't make a summer. One signal doesn't make a trade, 2 signals doesn't make a trade, 4 signals doesn't make a trade. It's got to be all 5 of them, all going green at the same time. Then you place the trade. And then you have to decide when to exit. And deciding when to exit is as important as deciding when to go in, because if you exit too early, you lose profit on the table. If you exit too late, you lose the profit that you had because the trade's gone back in the other direction and it's either gone down to a smaller profit or even into a loss. So getting in and getting out is the whole expertise here. And the win rate is really important, and having small maximum losses, making sure that you've got a mechanism in there that if you make a loss, it's a small loss and you're out of the trade, rather than letting it get bigger and bigger, hoping that it's going to go right. You remember when Barings Bank went down a few years ago? That was a forex trader who was trading manually, and he was making losses, and he was chasing the losses in the hope that they were going to turn into bigger wins and put everything back, and it took down the entire bank. Hundreds of millions of dollars worth of money were lost. So, you know, it's a tricky game. If you can balance the win and loss sizes, you've got small maximum losses, you've got a good win rate, then you're onto a good thing. And that's what our robot is currently doing for us. So I think that's, yeah, and automation is the other thing here. Just, I talked about it before. Robots can trade unemotionally. They follow the rules. They use set trade sizes. They're basically safer than the people that design them. In the same way that I think that some self-driving cars are now safer than most drivers, because they follow the rules and they're cautious. They've been designed to be that way. So I stop sharing there and see, are there any other questions?
Brian, sorry, I've gone back to your website and I can see, and you have quite rightly declared your who is trading for you. It's on your frequently answered questions, and it's actually Radex Markets, who are based in the Seychelles, and they use Go Markets, which are based in Melbourne, Australia. So that's my question. Yeah.
Yes, Go Markets is the parent company.
Yeah.
Radex Markets is based in the Seychelles, although most of their staff, I think, are in Taiwan, but you never know these days where people are working from.
So that's fine. I've got that information. Yeah. Thanks.
No, we're being
Brian, I've got a question about the MT4 trading app, just to try and understand a bit more what I'm looking at. Because I know you said initially all I need to worry about is the balance.
Yeah.
So I did a bit more research, and it said that the money that is accessible to you is the free margin. So I can't take out anything more than what's in the free margin. Is that right?
No. Well, let's unpack a couple of terms here. What you'll see in the account is a balance. The balance is the balance of closed trades. So it's however much you deposited, plus any profit that you've made, minus any withdrawals that you've taken. Right? That's the balance. And usually at the end of each day, and usually at the end of each week, the balance will be the same as the equity and the money that you could take out, because all open trades would have closed overnight, or they would have closed in time for the weekend. Occasionally trades will run over the weekend, or they'll run overnight, but usually they don't. So the balance is the number that is, it's the key to how is your wealth growing or dwindling. If the balance is going steadily up day by day, your account is gaining in value. Right? Now, apart from the balance, if you look on the MT4 app at what's going on in your account, you'll see that there are open trades. And most of the time, the open trades are showing a loss. It might seem strange when you think we're trying to make a profit, but the reason is that when the trades show a profit, when they get to a certain profit level, they get closed. And the ones that are still in loss are the ones that haven't yet made a profit. So the ones that are mostly open tend to be loss-making. Now, if you closed all the trades on the account, that open loss figure, what's shown as the, what's it called?
It's just in the top left, yeah.
Okay, well, there's a balance of open trades, which is normally negative. Now, my account that I'm looking at the moment has got a balance of $576, and it's got open trades of minus 300. Right? That's an unusually large amount. It's normally like 30 or 40, but at the moment just happens to be up at the 300 level. That means that rather than having $576 that I could shut the account and take it out now, if I closed all these trades, I would lose that $300 odd in the open trades. That would be subtracted from the balance that I had from closed trades, and I could take out what was left.
Okay, and that's the free margin.
I would need to ask. No, it's not. It's the equity is the difference between the open trades and the balance.
Okay, but when I searched online, it was saying that you can only access the free margin. You can't the money that you have in equity you can't access. It's the free margin that you can take out.
That doesn't make any sense to me. I'll have to ask Tom about it, see if he's got an explanation that he can pass on. Because he knows these things inside out. He knows every number on the page. He knows what they mean, what they don't mean, and the significance of them. I'm not an expert on this, and my understanding is certainly I know that by the time the trades are closed, end of most days the trades are closed. The balance is the same as the equity, is the same as the amount of money that you could take out of the account if you close the account right there and then.
Okay, but it's not the case right now, so I'm just interested to know what all those figures mean. Because, yeah, I was under the impression that the balance was what I could take out, but when I did a bit more research, it's kind of not the case.
No, the balance is... Well, as it says, it's the balance of closed trades. It's the balance of everything apart from what's active at the moment. And usually every night, and certainly usually every weekend, the balance becomes what you could take out if you wanted to close the account. But in the meantime, while the trades are running, most of the time you're going to see a negative balance on open trades, and the equity is going to be less than that. And the equity would be, in my understanding, what you could take out. But I don't know.
Okay, that's not what Google says. Do you think you could find out for me and just clarify?
Yep, and I'll put together a little video that explains it.
I think that would be helpful. Maybe if you put a video together that goes through everything on this screen, just so you kind of have a better understanding.
I'll do that. Any other questions?
Is there any other costs or anything that is not by Easy Wealth, but they're by the account that would be in Australia? Is there anything else, like for instance, to close out your account? Sometimes people charge to close out your account. Like, let's say you do want to close it out at some point.
I think there's a $5 charge.
Okay.
I mean, I don't think there's anything significant. It's not related to the size of the account or anything else, as far as I know. I need to check with Radix Markets to see if there's anything that I'm not aware of there. But they don't charge you anything to open an account. They don't charge you anything to make transfers. They don't charge you anything to change the money between currencies. If you open a dollar account and you put pounds into it, they don't charge you. You get the international exchange rate of that moment as your exchange. They're not making money off you that way. The way that the brokers make money is that every trade has a buy price and a sell price, and there's a spread between those two. And so every time you place a trade, they make a little bit of money, and every time you close a trade, they make a little bit of money. And that's what the brokers make their income from. And one of the reasons that we're using Radix is that the spread that they use, and therefore the income that they charge, is relatively modest compared with some other brokers. And therefore there's no profit left for us.
Okay. So essentially Radix is taking some fees and you guys are taking something, right?
Yeah, the Radix take money every time you trade, whether you make money. Right? So it's a bit like a lawyer. You pay a lawyer whether you win or lose the case. When you use a broker, every time you place a trade, the broker makes a little bit of money. Not enough that you would notice in most cases, but they're making money on every single trade. What we do is we get what's left after that is the profit in your account, and we take a quarter of that on a monthly basis. And that gets, when I say we take, the broker gives us, they have the mechanism in place to do that automatically. We have absolutely no access to your account to take money out of it. But either when you make a big withdrawal or at the end of a month, the broker will pay a portion of that money to us so that we're getting our 25% of the profit generated. If there was no profit, we get nothing. And it works on a high watermark basis. In other words, let's say that you made a lot of money in January, and then in February you make a loss. So in January you would have paid out a profit share. February you make a loss of $500. Nothing gets paid out. In March you make a profit of $1,000. The first 500 would be netted off against the previous losses before there's any profit on which we take a share. So we'd be taking profit we'd taking a share of the second $500 when it's gone above the level of losses and it's now gone beyond it.
Okay, so it's kind of like a cumulative profit then.
Yes. Yeah.
Okay.
So there's no way that we double dip.
Okay.
Okay, following on from that, Brian, the double dip. So you take 25% of obviously of the profit every month.
Yeah.
But it's just the profit for that month, if there is a profit. It's not the profit, the cumulative profit that we've left in there. Okay, that's fine. That would be big.
Yeah, that would be good.
That would be bad for us.
Yeah.
Okay.
Great. Well, thank you very much for your time. I hope you found that useful.
Mm.
And I hope you don't mind me passing the recording on to a couple of people that couldn't make it this evening that said they would like to see the recording. I will do that. And talk to you as and when. If you have other questions and you want to come back to me, if any of you don't have my contact details, they're on the website. You just look under contact. You've got my phone number, my email, my home address. Everything's there, I think. So you can get in contact. Happy to talk to anybody anytime about the business. Anytime, well, between 9 and 9.
Put boundaries on this, Brian, otherwise it will take over your life, for God's sake.
Thanks very much.
Thank you.
Thank you.
Good
Okay.
luck, Kath. Good luck.
Thank you.
It'll be fine. Honestly, it will.
Bye.
It's 300 pounds.
Exactly. Thank you.
Yeah.
Bye.
Bye-bye.
Bye.